Hi guys, right. It is Wednesday 27th, day number two of the Coldplay concert this week. So all you guys that are on that one, I hope you got home safely yesterday. But yeah, we're up again tonight, and let's hope we get home in time. No night buses tonight. So this particular video, following on from conversation. So Sam, you're getting there with your funding. So I'll see you at Wembley tonight. Danny spoke about something with regards to the S&P 500, Wall Street 30, NASDAQ, UK stock markets, whatever. You know, I think where we sit at the moment is these are weird and wonderful times, and some things in the in the wind, and the idea is not to be caught in the market with our pants down or highly exposed with a lot of money in stocks. So I think one of the things, one of the part of the conversation I had with you, Danny, yesterday was that. Difference between sort of technical trading and fundamental trading. If you go back, let's say, to the early, 1900s, it was all about the papers, and a lot of the manipulation that you get that takes place on technical charts at the moment was being done with news. So, typical pumps and dumps, they're still being done today with cryptocurrencies and things like that, in that you'll get something into your Insta or whatever, this is coin's going to pump, and everybody jumps on it, and the people that are in it early exit and leave everybody else holding the rotten bag as it tanks. So yeah, that's the manipulation is still the name of the game, and I'm going to do some more videos on name of the game. But if you look at that side of things, that's fundamental, and markets are still driven by fundamental aspects today. If you don't wake up every morning and go to your market indicator, either something like Forex Factory, with regards to news announcements, then something that's liable to happen with regards to people employed in America, particular sentiment around figures regarding inflation that are coming out at 1 o'clock or 8 o'clock US time. If you're not aware of that, that has a way of really interfering with what you're doing. So fundamentals are still important and still move markets. But there's a school of thought, after the 70s when computers came in and people are able to trade markets with computers, and have computer charts, and everybody had access to charts. It wasn't something specialist that you had to sit down and do yourself, or you needed a large banking operation behind you to do. Anybody could open up a chart today, and so and the way, if you look at these news announcements when they come out, and if you look at a chart, actually around the time of these news announcements, the price is literally moving up and down, fluttering on the basis, it's going up, it's doing wild gyrations on the back of these news announcements. So there's a school of thought today, especially since the 70s, 80s, in that everything you need to know about the price of an asset, be it stock, Microsoft, Tesla, everything you need to know about Tesla is in their stock price, and everything, any asset, what's going to happen to the US market, and correspondingly, what's happening to, the S&P 500, Wall Street, 30, NASDAQ, etc. You can look at a chart of those and it will give you an insight into what's happening. So I'm just going to use some share one. I'm going to start with the S&P 500 because that is a fairly big one, and this one is related to American stock. So I'm hoping you guys can actually see that. And what I'm going to do is I'm actually going to go to this on my chart here, and I'm going to manipulate this, see if I can move it. And I use MetaTrader. I'm old, and I'm going to hold my hand up. I'm going to say, look, I'm old. I use MetaTrader. A lot of you young guys out there, you use a lot of the new trading platforms, Trade Locker that are trading view based. But anything, the feeling is, look, it's a chart, it's a chart, it's a chart. It displays the same information. So because I'm old and I'm showing you MetaTrader, it doesn't mean that you can't use Trading View and have your trading charts always with you. So this is a chart of the S&P 500. So let's get into the technicals of this. What's going on with this chart? Well, obviously, it's going up. You can see it's been going up. I think let's take this up a little bit, and you can see where's 2019. So you can see around there. That's 2019. So that was COVID. How many ever years ago that was. It seems like forever now. But yeah, can you believe we were locked down at home and we couldn't get out? But that's COVID. Since then, we've shot up, we've retraced again, and we shot up, and retraced again, and we're shooting up. So one of the things you look at in markets is you look at three phases. So you've got a 1, 2, 3, 4, 5. So we're in the fifth leg, and this is what you call an extended fifth leg as well. One of the things you can do, and just to give you the time frame of this chart, it is a monthly chart. So if you zoom out, it gives you, really useful information. So we've got down there, 1st of February 2016. So MetaTrader are not great in that it restricts the amount of information you can get. But if you use something like TradingView, you can get a lot more information on that web platform. But one of the things to do in order to measure where something's going, and I do this as a rule, this saves me so many bad trades. And if you can get your head around this, it's going to save you a lot of bad trades, and it's going to put you into some really good ones. So what we have effectively from 2016 to 2019 is we have this ride up. Yeah. So that corresponds 0 to 100. I'm just going to try and make it as simple as I can. So if you've got the initiation point, if you've got the end point up to COVID 2019, what did it do when it hit COVID? It retraced. That is 76%, and that is not uncommon for markets. If you look at people that are active in markets, the professionals, they're not looking to buy, when it gets above COVID. They were buying down there. They weren't waiting until 2020. Everybody else was, oh, get out the market, panic, the world's over. Yeah, panic. What were they doing? They were quietly just stepping in, buying the Teslas, buying the Facebooks. If you're not aware of the S&P 500, it is essentially the top 500 companies in the US market. So, these are your McDonald's, these are your, I'm trying to think of them, but you know them. These are the global brands that you see that are not the super brands. The super brands in the Wall Street 30 are, the big oil companies, GE, General Electric, companies like that. So just Google, S&P 500 companies. But just to summarize and come back and reinforce this point, what you've got is a 0 to 100. Now, if you want to know where a drive is going to finish, if it comes up quite aggressively, comes back 70%, the minimum you are going to get is this 127%, and you got it soon after. Also, 200%. So where did so we've got 1, 2. Where did leg 2 finish? Just below 200%. Yeah. But we got it. It retraced again, and we got it eventually. So typically where the drive, if a drive for me is going 200%, the next logical place is 261.8. I've done part of my, the course that I taught to some of the young folk in the 100 Black Men. I've done a course which talks about Fibonacci numbers. So 0.618 is a typical Fibonacci number, and what I'll do is I'll post details about that Fibonacci, about that Fibonacci course, and you can get an idea into how this works. But essentially, if you've got 100%, you've got a 76% retracement, then where you're looking for this to end is 200% of that. So literally double what it's done. So you can take your crosshairs here and you can say, okay, we got, what is it, 160,000 points there. So if you go from the top point, you can expect it to go at least another 160,000. So 160,000 is our 200 mark. Yeah. And did we get it? We've got it. So this is how you also get ahead of the market. So this is the interesting point. We've passed 261. We're already there. We're already past the 261.8, a Fibonacci number. A good place for things to end is the 300%. So 160 plus another 160. So if I go there, 200, where does another 160 take me? Takes me up to that 300%. Where are we at the moment? We're just shy of it. So I don't see anything happening with this stock market falling over until we've at least reached the 300%. Scary thing, guys. We are really, really close to it. So you're getting ahead of the market, and you can say with confidence, if something's done 200, more than likely it's going to end at the 300. Yeah, more than likely you'll at least get the 300. There are other places to go. Further up there's a 423 percentage, which it can also go to. But I'm not sure it'll get there. And I'm not market oracle, I'm not radio market, and I can tell you exactly what's going to happen. But what I will give you is something that's interesting. Now, as another way to get ahead of the market, we've got what are called oscillators. So this particular one is what's called a stochastic, and it again, you can Google these, but I use these to give me cycles in the market. So you've got a cycle up, comes down, cycle up, comes down, and that turns, and these give you clues as to when the cycle up is about to begin. These indicators, this one is what you call a moving average convergence divergence indicator. It's called a MACD. Essentially, it measures momentum. So again, it's based on cycles. So you get a cycle up. This one's also based on two moving averages crossing. So when those moving averages cross over, faster one crosses over the lower one, we're on our way up. So it's a way you can use these to time your trades. The only downside with these moving averages, unfortunately, is they're built on the prices of these candles. So you can imagine this is a monthly candle. It's going to wait a month to find out what the high is, what the low is, and then it's going to calculate that, and then it's going to show it. Obviously, this lags behind what's actually happening on the chart. So these are really slow. They're slightly slower they're a lot slower than you need to get into trades. So a lot of people trade moving average crosses. You can also put them on the chart. So you can put a moving average. This central orange one is a 20-period moving average with these Bollinger Bands. So again, you can Google Bollinger Bands, but there's a moving average. I've got a 50 and a 200 moving average. When these cross, so people can jump into trades as well. But you can imagine they're relatively slow, worked out on the candles, so they're a little late to the party. But here's a situation where they are not late to the party, where they are ahead of the party. And I'm going to show you something, hopefully something that you guys will start to appreciate. This is called a divergence. Now, if I take a trend line and I put it there, and I'm just going to get I'm just going to start again on that mouse too close to the keyboard. Take the trend line and put it there. Right. I'm sure you can see from that trend line the price is going up. Yeah. So same period here on this moving average convergence divergence indicator. So if I go there, what's price doing? It's going down. Yeah. So what's this telling you? You've got price actually going up. You've got a momentum indicator going down, reaching the top of its cycle. What's it telling you? It's saying that price is in disagreement with momentum. And this rising is hollow. It's actually hollow. Yeah. There's not a lot in it. What are these people doing? What are the pros doing? Yeah. They're looking to sell this to, the non-pros, i.e. the unsuspected public. I don't know that it won't get to 300 and stop, but this is a leading indicator. Again, you've got this divergence here. Let me show it to you again. There's one here. We're going up. Price is going up. Price is telling everything that it needs to happen in the market. At that particular point, what did it do when it got to the top? It started to work its way down. Yeah, so if we take that middle point of price, what did it do? It was a divergence. There was a divergence there in July that you could start at the spot, November 2020 to July. If you looked at this monthly chart, you would see this divergence. Price going up, price going down. What did it do? What did it do in July? Bang, it went down. So this divergence is something that tells you this market is about to fall. So interesting thing for you guys. So if you use this Fibonacci's, going up, measuring where things are about to go, you're not just trading blinds. You've got an idea of where something is likely to go, where you need to switch on, wake up, be aware of it. I've got this on my chart now. One of the things I do is I mark things in colors. So I'm going to put anything on a monthly chart, I put in brown. So I'm going to double click that. I'm going to horizontal line properties. I'm going to make it brown. And the reason I use different colors is that it tells me it's a monthly resistance. It's a hidden resistance as well. If you don't know about Fibonacci's and you're not looking for these levels, nobody knows that's there. But if you do know it's there, you can put in and mark up 300% monthly Fibonacci extension. And there it is. Fibonacci. There it is. So guess what? It's taken about a month to get to there. I think we're close. I think we're within the next 2 to 3 months of hitting that 300%. Will it blow past it and keep going? Could do. Yeah, it's a possibility. Yeah, it's a possibility. This may just be bullshit and it just keeps going. But, based on what's happened before, yeah, it's coming. Yeah, that's my take on it. Would I be buying significantly above there? 6 oh God, look at that as well. Look at the number 6663.27. Yeah. A spooky number if that as well. Would I be buying much above 666? Probably not. I'd be waiting to sit on my hands and go, you know what? Let's wait and see what happens. If I've been buying this market, guess where's a great place to get out? That 300% for me. Fantastic place to get out. So I'm going to leave you with those terms. Hopefully it's been useful. I'm going to load it up on YouTube. Give me a thumbs up if you like it. Hope it's been useful. Hope it's been useful for you. And thank you for the time on this.